What's up, guys? Big Mike. I'm doing a video on DXY here. Um, I'm tracking this, every day because I think this is very related to what's happening in the stock market and the crypto market. Because when the DXY goes up, which is the U.S. dollar index, um, it means other currencies and risk assets go down, like cryptocurrencies, tech sector, stocks, things like that. Typically, oil and gold also go down, but they've kind of synced up with DXY in recent times, probably because of the war in Ukraine, I would assume. But, just a little historical data, I guess, or charting of how things have usually happen when we see the DXY get into this price area where it's above 100 and below 104.30, 104.50, we'll call it right over here. So sometime back here in March of 2015, the DXY hit 100 and, they nuked it back down to 93, traded it sideways, hit 100 again. They nuked it now back down to 91. And then it made a pretty strong push, cut right through the 100 level, held it as support for a little bit, found strong resistance right here, right about where we are today at this 103.60. And I would say this is the most 103.79, 103.80, almost 104 is probably the highest it's been in what is it, 2015 till now, so 7 years. So it hasn't been at this level. And, this was January 2017. And I'm not sure about the FA, the fundamental, but I think they were raising rates. I think this was, stock market, the Federal Reserve was raising rates during this period. And then Trump came, if I remember right, and Trump was very vocal about he wanted to keep rates low, and he changed the Fed president. He got rid of Janet Yellen. He brought in Powell, I think, and the stock market reacted well to this. And the stock market boom, cryptos boom. And they nuked the DXY from this level to the lowest it's been in a very long time. Right about here in February of 2018 is where it bottomed. And then it ran hot for a while, and it ran all the way back up to the most recent high, which is almost where it is now, 103. This area between 104 and 103 is really strong resistance for the DXY. Here's the pandemic, the COVID crisis. So, they nuked it. They brought rates down to zero. They started printing money, and that sent us down in 5 waves down, which I counted. I just didn't go back through all of this. I just started from here because DXY is very hard to count. It's not that it doesn't follow the rules in EW. It's just the waves start to look impulsive, and then they end up becoming corrective very quickly and very easily because there's just so much fundamentals that go into this. It trades, it's a currency that is the global reserve currency. And I think it trades off the yen and the euro, and I believe it trades off the RMB as well from China. I think they're all kind of tied into this. So it's just really hard to count in time. But I got a clear 5 down here. We got into this falling wedge. And then since then, it's pretty much exploded, and this is the inflation narrative. This is the war in Ukraine. This is Joe Biden, the Alzheimer patient president we have now. So obvious risk off as of starting in June of 2021. It's been pretty much going risk off. And I've got what I see here now is this long-term parallel channel completing 3 waves up, hitting the bottom of this channel for wave 4, bouncing off of it. Originally thought this would make a 5, but noticed the 2618 at 101 roughly was never tested, and that's a good wave 5 test. So I kind of left you could check back into my in my group, in my channels. I do the DXY for free in my group, and you can also check back on TradingView. And I call this over here hesitantly, thinking that maybe this top channel will block it. And then we entered into a bullish A, B, C, D, E, and we bounced off. And I knew right away, okay, we're going to go for 101 and hit the 2618. And then I was saying the perfect 101 right here would have been a perfect wave 5. So like I was saying before, it's like the DXY really makes its own rules. It's very hard to count. So by EW rules, this should have been it, and we should have started to drop. So feeling good, like the drop was coming, and then boom, we got supported on this top parallel channel. So the resistance from here, the 1 test, the 2 tests over here, 3, 4, 5 tests, the 6th test broke it out. It hit the 2618, and now it made support. And now it's going into this parabolic move, basically in this area that I said from before is massive resistance for the DXY. Below 104, 104.50 and down to 101, even 100 is, historically rejects 1, 2, 3, 4 times it rejects it. Now you might be saying, well, what's the reason for it to reject? Is it the Fed's not going to come in and print more money and the war is still going? So I don't know what the fundamental reason would be for it to reject, but I do know that historically this is about where we run out of gas on the DXY. So the stock market is looking pretty wrecked. I mean, the NQ, which is right here, hit my target. Let me just fix this chart. Almost hit my target. The bottom of the this parallel channel at 12,000, roughly 300, is where I'm roping off the NQ. Starting back here. So I don't know. I mean, it's a moving target. I was thinking maybe it could even overshoot to 11,900, but the NQ did get very close. It might still go. I mean, we might go to 104. The NQ might go to 12,000, and then you look at the S&P, and the S&P lost my bottom trend line support, and now it looks like it's heading to double bottom at 4,100. So, it looks like we're getting close to a bottom in the stocks, the legacy markets, and I'm looking at, where is it? I'm looking at the DXY, like how much more gas do you got? Well, we'll look at the RSI. The yellow line is the trend, and the trend is above the mid-level and is almost in overbought. The RSI, the relative strength, is already in overbought, and you can see typically it comes here and it goes down, comes here, it goes down, comes here, it goes down. So I would say the daily has been really acting as support. I mean, we started to nuke here, like I call my 5th top. Look at the stochastic, we started nuke, but then it got a support. Pull back to the 4-hour. It's been overbought. The 4-hour the trend on the 4-hour is in overbought, which, it hasn't happened often, but it does happen. Back here in January, it got overbought right here on the top of wave 3. The RSI got overbought, and the stock RSI usually leads before the RSI. So that was a good wave 3 top that stopped the momentum. We came all the way back to the bottom down at 95. And slowly, the trend on the 4-hour has brought itself all the way back up into overbought, which it hasn't been it was like that in March and like that in February of this year. So we're in a good area for the DXY to reverse and start heading down. EMA 50 on the daily is at 99. EMA 100 on the daily is at 97, 73. EMA 200 is at 96. So these haven't been tested in a while. Weekly, RSI is already overbought the trend is dragging up there, getting very close. Stock RSI is overbought, right? So those are two indicators that I use to line up with my my wave counting and my support and resistance lines. The monthly is right here at the midpoint between overbought and oversold, but the monthly stock RSI is dragging overbought. So, but this is a pretty huge bullish candle entering into strong resistance. So, I mean, it would make sense if it does go to 104 like it did over here when it went to 100 and the RSI went overbought, the trend eventually caught to the RSI. They move a little bit slower. So maybe we do pop up to 104. Maybe we nuke from here. Not exactly 100% sure, but it looks pretty tired. And if the DXY pops up and then comes back down to the midpoint on the monthly to test this trend, you know, we're talking down here, 94.89, 93.23, and the 200 at 92, right? That's the trend right here. The yellow, the EMAs, they help to make the trend. So halfway between the low, I'm calling it 88, and the high, 103.74, midway is probably somewhere over here around the EMA 100 at 93, possibly 94, 95. This should be about halfway between these two zones. So there's a reversal coming, and this should give some life back to the stock market and some life back to the cryptocurrencies. You know, I'm just watching it now. I'm watching it every day in my group. I chart it, and you know, it's important. It's really important. So I just wanted to get this out there, guys. Going to post this to YouTube, and it should show up on Twitter as well and on TradingView. Thanks for watching.